Hello guys, welcome again to this important video. I want us to talk as friends, as brothers, and to let you know the kind of setup that I take in the market. I do not trade anyhow. I do not look for opportunity on all moves in the market. Okay? There are some moves that are just meant for the market to develop. All right? They are necessary for structure to complete. All right? And there are some other moves too that are there for you to capitalize on in order for you to be able to trade to make money. All right? So you should be able to differentiate those moves that are meant for the structure to complete that does not concern you as a trader. We will to differentiate such move from those that should concern you as a trader. Okay? The day you are able to recognize this, the day you are able to differentiate this, that is the day that you will become consistent, making profit from the financial market. All right? So, quite sometimes now you've been seeing me forecasting the market, telling you different moves that will happen. But from those moves, there are some of them that you are not meant to trade. And there are some that you are meant to trade. So how do you differentiate them? That is the essence of this video, guys. For you to differentiate those moves that are for the market to develop and those moves that are meant for you as a trader to capitalize on. All right? But you know that in an impulsive market where you have 1, 2, 3, 4, 5, you know that this is wave 1, wave 2, wave 3, wave 4, wave 5. Out of these waves, this wave 1 is an impulse. All right? Wave 1 is an impulse. This is an impulse from this level to this level. It's an impulse. From this level to this level is an impulse. From this level to this level is an impulse. Can you see? Whereas from this level to this level is a correction. This level to this level is a correction, which means wave 2 is a correction, wave 4 is a correction. These waves here have corrective structure in their place. And those corrective structure are very slow and sluggish. So you don't want to trade a corrective structure which is very slow and sluggish. Okay? You want to rather trade a move that is sharp, with 1 sharp, with 2 sharp, with 1 sharp, with 3 sharp, with 5 sharp. These are the waves that you are meant to trade. But I understand that in most cases, it is often difficult for traders to identify which one is wave 1, which one is wave 3, which one is wave 5. That is why we have come up at NTFX Trading with the idea that it is not compulsory for you to have a 5-wave impulse in the market. And we have distinguished or differentiated these waves into 5-wave structure, 3-wave structure, and then a mono wave. All right? We have distinguished them into 3. This can be an impulse, this can be an impulse, and this can be an impulse. All right? But what is most important is that you must understand that when you have impulse, you have corrective structure, you must have another impulse. If you have impulse down, you have corrective structure, you must have another impulse down. This is the foundation of trend and corrective structure. Your understanding of trend and corrective structure is hinged on knowing the fact that in every impulse, you must have a corrective structure. And after corrective structure is complete, you must have another impulse. So the question now is that, how will you know that this impulse has appeared and this corrective structure is complete? So that is where the issue is. Okay? And on the basis of that, I will tell you that there are 2 different ways I look for setup in the market. For instance, if I have a weekly time frame like this, all right? I have this weekly time frame. So already from here, I know that yes, we break structure. After breaking structure is corrective structure. You now have it like this. From this level, corrective structure is there, regular flats. And then I want to push to the downside. So I have identified this on a weekly time frame that the momentum of this market is to the downside. So what do I need to do? I go to 4 hours time frame. I want to see structure that, show me that I'm having a trend to the downside. And if you look at it very well, you will see it clearly. You see impulse, correction, impulse, correction. All right. So now this correction now, how will you know that this is a corrective structure for downside? Now that's where we are going. Number one, you want to trade impulse after corrective structure. Okay, you want to trade impulse after corrective structure. Impulse, correction, corrective structure, you want to trade the next impulse. When you are trending, when the market is trending, every impulse will have a corrective structure. Once you have break of structure like this, leave the market, you will have a corrective structure like this. After this corrective structure is over, you will trade the next impulse. That is for a market that is trending. Is that okay now? For a market that is trending, I want to see, once I see my weekly time frame and the direction or the momentum is to the downside. Beautiful. What do I want to see? I want to see a break of structure, impulse. The next thing, corrective structure. This is where I want to trade. For a market that is trending, look at it. Weekly time frame is telling us it's trending, break of structure. And for a market that is trending, you always see break of structure. When you have a break of structure, the next thing is corrective structure. Now I have a break of structure, I have corrective structure. This is where I want to look for entry. Okay, weekly time frame is still showing us a bearish momentum. Therefore, I need to see a break of structure on H4. What do you see? Break of structure. After break of structure, what do you want to see? Corrective structure. Boom. This is where I want to sell. Can you see that even though the market has not given me the opportunity, I've already anticipated where I want to sell from. Why? Because my trading strategy or my trading system, okay, teaches me to understand where the momentum of the market is in the higher time frame. And in this case, I have chosen a weekly time frame that is not going to lie to me, is not going to deceive me. I have chosen it as my higher time frame. And I have chosen H4, all right, H4 time frame to look for my structure, to look for my break of structure in the direction of that weekly momentum. And as a matter of rule, as a matter of necessity, both necessary and sufficient condition, stipulates that when you have a break of structure on H4 time frame, you must have a corrective structure complete that follow that break of structure. Look at it. Break of structure here, you must have a complete corrective structure here before you can look for sell opportunity to the downside. All right? And that corrective structure must be a minimum of one wave. Not that you see something like this, break of structure, it just come all at a sudden up here, and you see you have seen a setup. No, this is a pullback. It is not a corrective structure, which means that you could have something, if you want to trade it from here, for people who trade demand and supply, you want to tell me that this has come to your supply, you want to trade it, you're going to lose this trade. Why will you lose this trade? Because this is a pullback and not a corrective structure. A corrective structure, has minimum of 3 waves. 3 waves. So what you see most of the time is that this market will just correct a little take liquidity and drop. You have put your stop loss there, you are gone. That is the secret in this market, guys. That is the secret. All right? What I have illustrated here is exactly what happened here. All right? Can you see a push to the upside here? Somebody will just jump in and say, oh, it's not at supply. No, this is a pullback. You don't trade a pullback. You trade a corrective structure. Can you see if you had gotten in for a sell here, you will have been taken out. Market just pull a little and break to the upside. You are gone. It is now that you have a complete corrective structure. All right? So that is the first setup that I trade in the market. When the momentum of the market is to the downside or to the upside, on weekly time frame, I want to go to 4 hours time frame or daily time frame, depending on the one that you want to use. But sometimes I use the daily. Sometimes if I see the structure on the daily, no problem. If I don't see the structure clearly on the daily, I will see it clearly on H4. I go to H4 and look for my structure. As soon as I get my structure, what do I want to see? There must be a break of structure. If that momentum in the weekly time frame is anything to go by, there must be a break of structure. And when there is break of structure, something must happen. Both sufficient and necessary condition. It must happen that a corrective structure must follow that impulse. Okay? And when that corrective structure is forming, you are not eligible to tamper with that market. You are not supposed to trade. Why? Because that corrective structure is necessary for the market to progress to the downside. It is a necessary structure for the market to assume the next progression. When you have impulse, you must have a corrective structure before the next impulse. This corrective structure is not meant for you to be traded on H4 time frame. Allow the market to form this corrective structure before you, when it is complete, before you now make another move to the downside. This is my first setup, and I'm going to illustrate them for you in a setup that we have taken in the past. All right? Now, what is the second setup that I trade in the market? Many people will tell me that sometimes it can take a long time for this corrective structure to develop. Does it mean that they are going to wait for this long time before they find a trade opportunity? Especially full-time traders who do not do any other job. They do not do 9 to 4. They do not do a 9 to 7. Or I don't know what to call it. They don't do all this. No part-time job. Nothing. They are just waiting for the forex market to give them their daily income. Are they going to stand and be staring at the screen for quite a long time, maybe sometimes 2 days, 3 days before the setup is complete? Of course, if you want to develop the virtue of patience, there is nothing wrong in you waiting for 2 or 3 days for your setup to mature. But if you want to trade in the corrective structure, there is a way you will do it. Okay? And I'm going to show you, because I trade in the corrective structure, but with a condition. It is not every time that I trade in the corrective structure. If you want to try it, that is where most traders lose their account. People don't lose account when market is trending and is at impulsive phase. People lose their account when they want to attempt to trade within the corrective structure. Corrective structure can be complex most of the time. If you don't understand market forecasting, especially using wave analysis, you will mess up most of the time. So that is why I want to do this video to clarify this matter and make things easy for you guys. So now, how do I participate in the corrective structure, which is the second type of setup that I take in the market? I only participate in the corrective structure only if the B wave has taken liquidity of the A wave, or wave B has cleared the ending point of wave A. Let me discuss this with you. Let's remove this. All right? I'm going to demonstrate this point so that you will understand what I'm talking about. Okay? Very simple. That is my second setup in the market. All right. If you have wave A here, and then we have wave B here, can you see the starting point of wave A here? This is wave A. This is wave B. Remember, you have this impulse. You want to go on another corrective structure. But in the corrective structure, which must be minimum of 3 waves, you are having A, B, and C. This is an expanding flat. Do you notice that wave B here has cleared the level of wave A? That is liquidity, guys. Once this wave B has cleared the level of wave A, it means that wave B has prepared liquidity sufficient enough to achieve an impulsive move of wave C to break this top. So I will now come to this level. If I see my entry system play out on 15 minutes time frame, I will trade this one to the upside. Can you now see that even though I've decided to trade within the corrective structure, that corrective structure, the one I'm to trade, must be the impulsive one, which is wave C. I cannot, in all honesty, trade this wave A. I will naturally allow wave A to form. After this wave A has formed, I will allow wave B to develop. And if wave B breaks the level of wave A here, then liquidity has been taken. Wave B has taken the liquidity of wave A for me to trade this wave C. This is my second setup that I trade in the market. Okay? So I have a setup that I take when market is impulsive. When you have impulse, you have corrective structure, I trade the next impulse. You have impulse, you have corrective structure, I trade the next impulse. That's number one. Number two, when I see impulse in an impulsive market, when I see impulse, and then in the process of correction forming, I am seeing expanding flat developing, where the end of wave B has taken the beginning of wave A. It then means that wave B has cleared the liquidity available at the bottom of wave A for me to trade this wave C to the upside. This is a fantastic setup I trade within the corrective structure. Every other thing that is happening in the market is none of my business. If you see me cutting the waves, analyzing the waves to see how the market will develop, most of the time, those waves we are cutting, they are just there. Even though we know that that's how they will move, we don't bother to trade some of those waves. We don't bother to trade this wave A. We don't bother to trade this wave B. We are only concerned with this wave C. And this wave C will develop only after this wave B is finished. And then liquidity develop here. It's taken here. So what if, let me replicate what you have here. What if you have something like this? Impulse, A, and you have B like this. I'm not going to trade this C like this. I won't trade it. Because this is still A, this is B, this is C for me to go to the downside. Why will I not trade this move to the upside? Why? Because this level did not take this level of liquidity. So once this level of liquidity is not taken, I'm not going to trade this wave C to the upside. So a condition that will warrant me to trade within the corrective structure is if wave B has taken the liquidity of wave A. I will use that liquidity to ride wave C to complete the structure. That is the condition. All right. So I'm going to show you the two examples of a setup that I take in the market. I'm going to show you these two setups. All right. So let's see the first one right here. We have seen the weekly time frame. We have to proceed to the downside. You must see break of structure and then corrective structure A, B, and C. This is my entry. All right, that is my entry. Okay, so now another one is there, break of structure A, B, and C. C is very short. There's no rule that determines or that defines how long C should be, provided it has broken the top here. It's correct. So you have A, B, and C. So this is where I'll look for entry to the downside. This is the setup that I take. When I see the momentum on the weekly time frame, I want to go to 4 hours or daily time frame. I want to see the structure, how market breaks structure. A market cannot trend except there's break of structure. A market cannot trend except there's break of structure. So if I've not seen a break of structure, I'm not looking for corrective structure. But as soon as I see a break of structure in the direction of my weekly direction, then I will anticipate a corrective structure. And a corrective structure can be a regular flat or an expanding flat. If it is a regular flat, like we see here, A, B, and C, you can see the B is not taking this level of A. A, B, and C, you can see that this B is not taking this level of A. They are regular flat. I'm not going to touch the trade within the corrective structure. It will complete. I will look for my entry here. Boom. Look for my entry here. Boom. That is the first type of setup that I trade. But let me show you the second type of setup that I trade. Already the momentum is to the downside here. The momentum is to the downside. You are having a break of structure to the downside. You have with A, you have B. A, B, and C. Can you see that this is wave B here, this is wave A here, and this is wave C here? Do you notice that is an expanding flat to the downside? Now, I'll show you something now. Do you notice that this wave B here has taken the level of wave A? It has taken it. That means that wave B has taken the level of A with A to prepare for liquidity to achieve this movement of C to the upside. So when I see this type of setup at this point in time, I'm going to trade this with C. All right? I'm going to trade that with C because I have gotten enough liquidity to achieve that movement to the upside. All right? I've seen liquidity to do that. Okay? So let's go there now and see how we'll look for entry. Let's go there now. Can you see? Right here. And I actually traded this. And when it happens like this, most of the time, you will see that momentum will drop as it's making a lower low to the downside. Let's see on the RSI. This is exactly how I trade, guys. This is exactly how I trade. Can you see? Upside. Can you see? Market is making a low, a low, a lower low, a lower low. What is it doing? A low, a higher low, a higher low. That means that momentum to the downside is gone. And once it happens like that, what do you need to see? You see impulse, A, B, and C. That is your trade to the upside. Boom. That's it, guys. That's your trade to the upside. And I actually traded this. Yes, this is how it works. Can you see? This is part of the corrective structure, guys. It's part of the corrective structure. And you can see I traded it brilliantly. Okay? So look at it here. Impulse, A, B, and C. Can you see? A, B, and C. I will trade this. I'm trading this impulse, which is part of the corrective structure. It's wave C. Because the rule is that wave A is very sharp, wave B is very corrective, and wave C is very sharp. So that sharpness of wave A and C, they are impulses. But you cannot trade wave A because you allow it to appear naturally. And after it has appeared naturally, you now trade the C. Can you see how it is done? Boom. All right. Let me see if I can show you more examples. Right here, you have break of structure. Can you see? Break of structure. Once you have a break of structure, it shows that the market, if it's a bullish market, it must form a demand level. And once there is break of structure, then it means the market has intention to trend. And then what must follow is a corrective structure. All right, A, B, and C. Do you notice that if this is A, this is B, and this is C, B has broken the beginning of A, that is liquidity. I can start looking for sell here to the downside to accomplish C. That's what we are talking about. Do you understand? That's my second grade A setup. All right. As this one is progressing to the upside, watch something. Break of structure here. All right. What do you see here? With A, wave B has gone to take this level. I can trade this wave C to come and take this low as a short form of trade. All right. As a short form of trade. Do you understand now? So that is how I look for my setup. Okay, that's how I look for my setup. Go to 4 hours time frame. Let's check another pair, guys. Let's check another pair. Let's check euro dollar. Let's check euro dollar, guys. Show you how I do it. Okay. Now look at it. Look at it. That same thing that happened that time. Impulse. A. 1, 2, and 3. That is A, B, and C. This is with A. With B. This is with C. All right. This is an expanding flat for this move to come. So we want to trade this move. This is the main move we want to trade. But before that main move, we have seen that wave B has taken the level of wave A, which means that it has taken liquidity. We have to look for opportunity from here to trade it to the upside. That is my setup, guys. That is my setup. All right. That is how to trade with C within the corrective structure. All right. Look at this one now. This is break of structure. A, B, and C. From this level, trade to the upside. Okay. This is a continuation trade within an impulsive move. Where is the impulse? Break of structure. A, B, and C. From this level, you have hit demand, trade it to the upside. That is my number one setup. And then number two setup is if you have a break of structure and you have A, if this B now take this level of A here, A, if B takes the level, you know that it's going to form an expanding flat. I will trade this move to the downside to break this low. Boom. And when I take profit from here, I trade this one to the upside again. It's as simple as that. That is those are the two setups that I trade every day. And if I don't see these two setups, I'm not going to trade. Can I give you another example? Yes. You have impulse, break of structure. All right. So right here you have A, B, and C. So this trade now is supposed to complete from here to the downside. But you see that it did not break this top until it pulled back and broke the top. Once it broke the top, I can trade this one to the downside to complete this C. That is A. Sorry, let me do it very well for you guys. This is A. This is B. And this is C. All right. How? You have A, B, and C. This is in the middle. This one here that comes down here must come down here. That's the wave C. So you have, this is not A here. This is not A here. Leave this one. This is with A here. This is with B here. And this is with C here. So this one is completed in the middle. All right. You now have big A here, big B here, and then big C here. So this B here has taken this level of with A, and then from here we have, that's why we look for setup to the upside for euro dollar, for pound dollar. Why? We want to trade it with C because with B has taken liquidity. Do you understand now? So it's as simple as that. Now let me draw the schematic for you again. You have impulse, corrective structure. You must have another impulse. This is my trade, guys. This is my trade from here to the upside. Another one, you have impulse. Then you now have A, B, Can you see? B has taken the level of A, B, and C. This B here is completed after taking this level of A. It has taken liquidity. So I'm going to look for setup from here to sell it to the downside to break this low. See, this is my second setup. I will now, after this second setup gives me frequent trade opportunities, because after trading this with C within the corrective structure, I will trade this with C for continuation to the what? To the upside. After closing my trade here, I will enter another one here. That is the benefit. So now, one condition for you to trade, for me to do all these trades like this. The completion of the structure must happen against the overlap. The condition is that these 4 hours, okay, A, B, and C, this C must complete against the overlap. Exactly when overlap is starting, that is when I want this one to complete. And that is what gives me 95 to 99% guarantee that this move to the upside is going to happen. This move to the upside will happen, because the market has set up against a high, has taken liquidity and has prepared itself for what? A high volume move to the upside or to the downside, as the case may be. Look at this one. When this one is complete, it must be against an overlap. The start of overlap, not just anyhow time. The start of what? Overlap. And then for me to trade this wave C to the downside, this structure here must be at the beginning of overlap. It must be that overlap is starting when this structure hits this level. Then I know that the liquidity is now available for me to trade this move to the downside. Not that this level is being hit as 3 hours from the start of overlap, 4 hours from the start of overlap. I won't consider it. It means that something like this may keep happening till the next day. That is the condition for me to trade this setup when it appears like this. That's number one condition that is attached to my H4 structure. The number two condition that is attached to this structure is to my 15 minutes time frame where I'm entering. If I'm to enter here, you know that condition number one is that this market, this structure must complete here at overlap. That is the condition that is attached to H4. The condition that is attached to M15 is that I must see structure, break of structure, corrective structure, and buy within 2 to 3 hours of overlap session. If I don't see this structure within overlap is just like 4 hours. If I don't see it within 2 to 3 hours of overlap, I'm not going to trade the 4-hour setup, despite the fact that it is complete and the condition attached to it, which is that it must hit this level during overlap. Even though I've seen this condition, I'm not going to trade it except structure develop on my 15 minutes time frame. When I say structure develop, I see break of structure, I see corrective structure. Boom, like this, I'm going to trade it to the upside. But if this structure does not develop, if market does not develop structure within 2 to 3 hours of overlap, it then means that that particular day, liquidity is not available to push the market to the upside. I will leave it till the next day. All right, till the next day when volume is available, I will now look for my structure and trade it to the upside. Do you understand now? So in summary, there are 2 types of setup that I consider as grade A setup as far as NTFX trading is concerned. Number 1, you must have impulse. Corrective structure is complete. The next impulse is your trade, which is this one, number 1. Number 2, you have impulse. Within the corrective structure, wave B is breaking the level of wave A. Once wave B is breaking the level of wave A, you will anticipate the formation of expanding flat. An expanding flat will have wave C to be very impulsive, very sharp and impulsive. You want to capitalize on that sharpness and the impulsive nature of wave C to now trade this wave C to the downside or to the upside, as the case may be. That is the second type of setup that I trade. You can see the first type of setup is when market is trending, impulsive, corrective, impulsive. When you allow the market to make impulse, the corrective structure, after that impulse, corrective structure, the next impulse is your trade. That's number one. Number two, within the corrective structure, wave B should break the starting point of wave A. Once it's happened like that, then you are anticipating expanding flat corrective structure. So that wave C, you now capitalize on it to the downside. That is the first thing you should know. The second thing you should know is that there are conditions that are attached to the formation of my completion of my structure, H4 structure, and conditions attached to the to my M15 time frame. You can use these same two conditions to the time frame that you trade. It is not a must that you trade my time frame. Your higher time frame might be H1. Use this condition on H1, and your entry time frame might be M5. Use the condition I'm using for M15 for your M5. It's as simple as that. There's nothing that says that me and you should be using the same time frame. All right. So right now, what is the condition attached to my H4? My H4 should complete exactly during overlap. That's the condition. If my H4 is not complete at overlap, you are joking. It will not work. And I will show you an example where market has taken the liquidity structure was complete, but was not during overlap. People took the trade, but they lost. And I will tell you how I did not take the trade. I waited until overlap, and I'll show you what happened in BTC. Okay? And then the second condition, which is attached to M15, is that there must be formation of structure within overlap. If structure, which is impulse, break of structure, corrective structure, you enter. Break of structure like this, here, right here. Break of structure, corrective structure, you enter. If this condition does not happen within overlap, forget about it. It's not going to work that day. It's going to work the next day. Do you understand? Now, let me show you BTC as we'll demonstrate this example before we close. On H4 time frame, I'll show you what happened. Look at what happened. All right. On H4 time frame, good. All right. So we're anticipating that this market should move to the upside from here. Okay. So if you have taken the trade from here, which was in Asia, this was in London. If you have taken it from London, you will have lost. Why? When overlap came, what happened? This move came down to clear the liquidity. So you must wait. Even though your structure is complete in Asia, in Tokyo, your structure is complete in London, wait for overlap to start to see the re-completion of structure. Now, re-completion of structure happened here. And after that, what happened? We want a structure. We want our structure to develop. All right? We want our structure to develop. Okay? And what did we say? That structure must develop during overlap. If it doesn't develop during overlap, you wait for the next overlap. Now, do you see it? You see it? Break of structure. The corrective structure, did it finish during overlap? No. It finished the next day. So you have no business trading here until the next overlap. What happened? The next overlap setup now happened. Look at the impulse was done yesterday overlap. See the corrective structure with A, with B, with C. This is a regular flat. From here, we took a buy to the upside. Can you see? Boom. Boom. No wasting of time, guys. It's as simple as this. Boom. That's how to do it. This is how to trade, guys. This is how to trade. So this is just what, I don't want to make the video long. This is just to tell you how I trade. This is the setup that I trade. This is the move that I trade. These are the two moves. You can never see me trade moves outside these two. When I see impulse, corrective structure, another impulse. That another impulse is my trade. Or within the corrective structure, I see impulse. So within that corrective structure, you know, if you have impulse here, within corrective structure, you have A. If you have B that take this one, this C is my trade to the upside. I'm trading within the corrective structure. And once this A is taken, I look for sell to the downside again. It's as simple as that. This is the setup that I trade. And these are the two conditions that are attached to my setup. Follow this, and I can tell you guys, you won't regret it. You will be consistently profitable. If you find any difficulty implementing this, just send message in the chat box or in the comment section on the YouTube. Send message. Just message me and say you are finding it difficult, or you want to be expert in analyzing the market, expert in forecasting the market accurately. It's not difficult. You can go to NTFX trading, guys. You can go to NTFX trading. You see our free courses, and then you also see market forecasting, advanced market forecasting techniques using wave analysis. Can you see it, guys? Do you see it, guys? Very simple. Once you come to this course and learn this, once you learn this, I can tell you to forecast the market accurately will never be your problem. You will cut it, you will cut the waves accurately the way I'm doing it, and you will enjoy it. Trading will no longer be a headache for you. Trading will be something that will be enjoyable. You will enjoy it. You take it as a passion. You can see me the way I take it as a passion. I'm very happy when market is resuming. Like some people, they have headache when market is about to resume. But I'm happy to see that the market is resuming. And even when market resumes, I'm not going to engage the market immediately. I'm waiting till overlap. When I know that liquidity is big, I'm waiting for my structure to complete in the direction of the trend before I will trade. That is why you see trend mastery here. Everything we are trading here is trend mastery here. Here is advanced market forecasting techniques using wave analysis. You can buy the two courses, but this one is just $100 for a period of 1 month for the whole of June. By July, there are some things that will be attached to this one. It will no longer be $100. In fact, it will be more expensive than the trend mastery course. All right, so that is it, guys, and that is what I feel as to discuss with you on this particular occasion, and I hope that this video will be very beneficial to you. I'm very sorry that it has taken long. It's very long. It just have to be so that you understand how to do it and be consistently profitable. So see you next time, guys. Bye.